Good morning, everyone. Welcome to our Friday morning trading session. Bear with me just a moment here. I had a little technical difficulty and I had to reboot my computer, so I'm just reloading all my charts now. And I'll do a screen share with you. Here we go. You can see there's not much to see. We'll give this just a moment. All right, let's throw the trade manager on here. My charts have been acting a little funky lately, so I'm just going to reboot it here from scratch. There we go. Usually you don't have to go through this trouble what you're seeing me do here, but like I say, they've been acting a little bit strange for my computer, so I'm just reloading it all from the very beginning. And it is still just the opening, the few minutes out of the open here, so I'm not overly concerned. All right, so let's take a look here where we've been with the NQ. A little bit more active through the overnight, it looks like. Not that we made any progress, but the market was certainly moving a little bit more. So no signal out of the open, at least not on the Falcon. We did get a trend change signal here to the upside, which was short-lived. Trend change signal to the downside, which gave us a little bit of heat, but looks like it finally got to its profit objective. Trend change signal to the upside. A real roller coaster. And here we are producing a trend change signal to the downside just out of the open. You know what? We've got a chance for a second push on this entry here. Now, the second push entry simply means that we let the signal engage, we let the bar move or retreat as it did here. It traded way up here. Oh, shoot. Now it's running away on me. Let's see if I can take it down here still. We let the bar form or the signal engage. The bar trades against us, so we know the current limit of the market, and that gives us an opportunity to get into a trade with renewed momentum. Now, this is still very early, right? It's only the first few minutes out of the open. And ideally, I should hold my stop back at the original place, which was right up here. Come on, stop. You can see why I wanted the better entry. Okay, and possibly working on a late filter entry signal. This is the problem with taking a signal right out of the gate and why I don't normally do it, but the NQ of late has been so strong out of the open. No, looks like they're gonna spank me for my trouble. Come on, sellers. All right, so they're not interested in heading lower. So even though that was a losing trade, we may have our direction for the day. I'm still loading my trade manager onto the last of my charts, so please bear with me here for a moment. Okay, now working on a first micro macro cross to the upside. We're into the hard edge, just a regular mess this morning. Oh dear. Yes, thanks guys. Everybody's shooting me notes here that it was non-farm payroll day today. And apparently it held a rather positive result, so that's good. You've always got to watch the news, though. I'm starting to think that the news people tell us what they want us to hear. Does that sound a little 1984-ish? Okay, here's an interesting opportunity on the Raptor. We're getting a failure here and a buy signal. Now I'm trying not to be too crazy with my signals this morning, but we've been on our Raptor forum, we've been looking at some of these counter trend signals, these counter trend opportunities. And you know what? I could throw an order in just like that. So it's based on the failure of the sell signal here. We've got the test of the extreme. It seems to print at the edge of the band, and so far, so good. Come on, get up there. Get that break-even trigger. Come on, Raptor. Be a rock star. All right, close enough. I'm gonna, oh, better engage my break-even. There we go. Come on. So they're feeling a little bit of heat from this area right here. Come on, take out this high. If they can take out this little swing high right here, this one, which I think was right out of the open. Yes, it was. This was our opening price or our opening high. This is where the sellers started to lay it on. And if the buyers can break through here, of course, we have all these sellers with their stop loss orders right here, right? The guys who were selling early saying, oh, look at how smart we are. And now the buyers have driven it back. Well, they're going to try to defend this position, right? Or people who didn't have the opportunity to sell out of the open are going to look at this and say, hey, this is a pretty good place to sell. But if the buyers can turn it here, and it looks like they may drift a little bit too deep for my stop to hold. But if the buyers can turn it around here and take out this high, then we're going to see all these sellers have to bail out of their position. All right. So not a bad little trade there. Let's see, Jim's asking for the YM with the ultimate support and resistance suite. Hold on there just 1 second, Jim, and I will get that for you. Okay, so here comes the Raptor yet again with a with trend signal now. This is, oh, I'm too late for that one. So here's the YM with the ultimate support and resistance suite. You can see we took a bounce off of the median line. Oops, sorry. Bounce off of the median line, drifted right through the primary support. Took a little bit of a bounce here off of the secondary support after fudging it somewhat. And now we're sitting right here below the primary. The primary support pretty looking like it's skewering this market more or less. Yeah. Right through the heart of it. So 173.57, it looks like that's the number to contend with. If we get a move lower out of here, we might get a good sell signal. And I forgot to put my Trailblazer on. Raptor. All right, so here comes the Raptor now with a sell signal. I don't know if I would call that, I suppose in hindsight you could call that a double pullback. Certainly is a soft edge or a bounce off of the hard edge and a bounce off the primary. I think Ricardo is really liking those bounces. All right, so we'll throw that on the shelf for the moment. And notice how here on the NQ, the sellers ganged up here. So this tells us that the sellers have control of the market. Oh, shoot. Now here come the buyers. Wow. What a tug of war this morning. Craziness. All right, let's put that on the shelf. A lot of seesaw action here this morning. Jim says the bank index pretty strong, and the advanced decline numbers, let's see, he's saying, oh, it looks like they're climbing a bit. They started at 800 buyers, 1,700 sellers, so that's like a negative 900, and now we're up to about 1,100 buyers and 1,500 sellers. So the advanced decline getting a little bit stronger. We'll see whether that transfers into the market also. Right now, no, as the stock index continues to fall across the board. We've got lower prices in the NQ and the YM. We just hit our profit objective with the YM. So a nice little, here's that YM trade again. Nice little signal here out of the hard edge. See, what I normally look for with the Raptor is I look for a double pullback into the hard edge. And then when it comes out, you see what that double pullback tends to do is also produce a test of the extreme, which it did here. Produces a signal that anytime you get a test of the extreme, it's worth trying the trade. Because the test of the extreme is showing you that one side is losing control of the marketplace. That's what we saw here with our little rally on the Raptor, on this little buy signal here. Let me roll this over. So we had the failure to sell, right? We got the sell signal. It was a failure to sell. This was a test of the extreme. All of a sudden we come back with a buy signal. So that tells us that the market, whoever's influencing the market, the parameters have changed. Right? So that gave us an opportunity for a short little move higher. Now look at this, we get tested the extreme lower and a sell signal. So we had a good opportunity here on the NQ also, and now the whole dance starts all over again. So if this comes down, fails to head lower and starts heading higher, well, that'll be an opportunity for us to buy. Looks like our eagle gave us a decent signal also. Here, this green bar sell. About the same time we were looking at that Raptor trade or that YM trade. The hawk, unfortunately, getting spoiled all the time by these yellow bars. See, here we've had our test of the extreme. Now we're coming in with a green bar sell. Ay, 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 what a mess. What a mess this morning. I was going to say a green bar sell, which we could buy the failure of, but they're not even giving us a chance there. Oh, darn, Eric, you're looking at too many different charts because here was that Raptor buy that we were holding out for. Hopefully somebody got a hold of that. See, the sell signal, the failure, the Raptor buy. And a comparable trend change signal here on the Falcon. So it looks like it's going to be a little bit of a chop fest today, folks. A few ticks higher, a few ticks lower, a few ticks higher, a few ticks lower. Normally we anticipate the farm payroll to have a little bit more follow through, but not at the moment. Okay, we're back at these early morning levels that we were looking at before, and here's our first micro macro cross opportunity. I'm going to have to cover it way down there in case it brings me in and turns into a macro pullback, which I hate. Come on, get up there. Get up there. Come on, let's go. Go. Oh, you stinkers. Get up there. I'm going to mute my microphone here in a moment and really let you guys have it. Come on, get up there. Okay, that's more like it. I was thinking about putting a runner on that one, and watch, they're going to make me regret not having a runner in that trade. Look at her go now. People are always asking me whether they should have a runner, whether they should let the trade run, or whether they should take profit on target. I'll tell you, the easiest thing on the nerves is to go all in, all out. The smaller your trading account, the more you should be going all in, all out. Because for every time you're going to miss an opportunity like this, you're going to get shafted on an opportunity like this. So if I had a runner in on here, let's see, did it reach the profit objective? Okay, so I would have taken, let's say I had 2 contracts instead of 3, because 2 contracts will be easier. So I have a $50 per contract target. Here, we'll make it 2 contracts instead of 3. There we go. So I have a $50 target. If I go all in, all out, I've made $100. If I fail to go all in, all out, I've made $50, rolled the stop to break even, then the market reverses, and I've only walked away with $50, which is still better than a kick in the head with a frozen boot, but it's, at the end of the day, you're not going to make a lot of money trading onesies, right? So for the opportunity to pick up $100 here, a few minutes later pick up another $100 or $150 here. Yes, we missed the opportunity to pick up a little bit more with the runner, but at the end of the day, most times you will fare better going all in, all out. Now, there are days like yesterday, even in the overnight, it looks we had some substantial follow through, where you're going to take a trade like this and it's just going to go and go and go. And actually, there was a bigger move than that. I seem to remember. Oh, yes, this one right here. Just an enormous move, right? First micro macro cross, boom, the bottom falls right out of the market. If you are trading a larger account and you can afford to miss the occasional trade, and by I don't really mean miss a trade, but I mean if you're trading a larger account and you frame a trade like this and you're trading 4 or 5 contracts, definitely take profit on 4, leave 1 in as a runner, and leave that stop loose. Just let it go. Let it go so that if you do hit the lottery and the market makes a substantial move lower like this, you know, you can easily, let's see, that's 45.65 to 45.50, that's 50 points. 20, you know, that's a huge move in the NASDAQ right there. On a single contract, that's fantastic move. So let your account be your guide, I suppose, is what I'm saying. If you're a small trader, just go all in, all out, grab the profit, put it in the bank, build up your account. And if you have the luxury of being a larger trader and you can take 3 or 4 or 5 contracts on a trade, then yeah, throw a runner in there because you never really know when it's going to light up and all of a sudden you're going to have a huge move to capitalize on. And those moves tend to develop probably once a week, once every couple of weeks. So it's not like you have to wait all that long to pick up on a huge move like that. This Raptor trade, the one that I was waiting for, I'm a little bit disappointed I missed the reversal because I've got the Raptor set up for a runner exactly for that reason. So that if we happen to catch a running trade like this one, we can pick up a few extra dollars on it. All right, so it looks like they're going to be, yeah, and like Jim says, you can always re-enter after the fact. While I was yakking away there, we got a macro pullback signal and a 4-arrow consolidation, all building into the same. And here too, I probably would have ran my stop a little bit deeper, but wouldn't have had to wait very long for that to find a profit target also. The Profit Finder is a great tool for figuring these kinds of things out too, because the market conditions change over the year, right? Normally, once a quarter, I'll sit down for an hour with the Profit Finder and I'll run it through the charts and see how the market is performing, how my strategies are performing. And I'll be testing things like, should I have a runner in play? Should I go all in, all out? Should I be using a break-even trigger? These are all things that you can test with the Profit Finder. Fantastic backtesting tool. I call it a video game for traders. It's terribly addictive. If you're currently getting in trouble for playing too much Halo or whatever your video game of choice is, you're not going to gain any brownie points with the Profit Finder. My wife thinks it's a video game. I tell her it's not. It's work. I'm working here. Oh yes, John says a lot faster than market replay. Absolutely. You know, you take a half an hour, you scroll through your charts, you enter where your buy orders are, and then with a couple of clicks, you can change your parameters. You can rerun your whole scenario, and it's easy to retest an entire month's worth of trading in about an hour or so. Yeah, Jim says trading is mentally exhausting. He's ready for a nap early afternoon. Only if you do it right, my friend. Yes, trading is, people don't realize it. You know, your friends and family, they're going to not really consider what you do work. And yes, it's not, physical work. It's not like you got the working end of a shovel or something like that. But yes, trading is very demanding, certainly on the emotional side. You know, being able to pay attention to your signals. Like now, look at what's going on here. We're generating a trend change signal on the Falcon. Okay, well, it's decision time. Do we want to do something with this? Do we want to let it pass? What are we going to do? Like, these are all difficult decisions to make. All right, go ahead. Get higher there. Take away any temptation to trade here. I'm going to dial down the risk amount for starters. If I do get a signal, I'm hoping to set it up. Oh, I can't take it. Not at 1%. What I was thinking is if I do get a signal here, I'm going to set it up below the lows, cover above the highs. That'll give me the most staying power. But it looks like it's a non-issue. Ooh, should have been paying attention to the soybean market this morning. Nice rally right out of the gate here for soybeans. Oh, these are the ones I love to see with trend. Look at that. Working on $1,000 move here in the soybean market. $500 a contract. So they call soybeans the pork bellies of the grain markets, but it is a fantastic market to trade. If you haven't considered soybeans yet, check them out. All right, now the signals are kind of coming here in a flurry. We're getting a late filter entry signal and a trend change signal. And we have a similar opportunity here on the Raptor as we're getting another one of these tests and failures. And we're getting a chance here to sell below the lows. Maybe cover above that little swing high, maybe cover above the big swing high. That might be a little more palatable. Oh, there's still lots of times for this trade to go sideways, but we're looking for them to perhaps honor this test of the extreme here, or that's right, this test of the extreme, the failure of the buy signal head lower. My concern is that it develops into a double pullback and continues higher. That's why I'm looking to enter below the lows here. This is where the buyers have stepped in, and if the sellers do maintain control, hopefully we're going to see the sellers overwhelm the buyers and not vice versa. Okay, great question here from Milish. Hold on one second. He's asking, how do I construct the right brick size? Since he's not trading the US markets, he's trading the Indian markets. And I did get your email. I haven't had a chance to respond to it yet, but this is a perfect opportunity to show you. The default brick size for your tools are 6 ticks on the Hawk, 8 ticks on the Falcon and Raptor, and 12 ticks on the Eagle. And maybe I'll start with the Eagle because it's going to probably make this the easiest to understand. So what you want to do is you want to pay attention to your daybreak. That's this vertical line right here. And you just want to scroll through your chart and see where your daybreak line occurs. You want your daybreak line to at least extend the width of your chart because that should give you a few trading opportunities. Now you don't want to have to scroll and scroll and scroll and scroll for, forever before you find a daybreak line. So here's a daybreak line. There's a daybreak line. That's about as far apart really as you need them to be. The problem that occurs is when you load the default settings on your chart and your chart looks like this. This tells you that for day trading, your daybreak lines are too close. The market that you're looking at, the settings are too high. This happens a lot with the E-mini S&P. If we're still in this charts or in this trade, so I'm not going to put the E-mini on here, but if we were looking at the E-mini S&P at the default settings, that's what this would look like. So if this is what your chart looks like, what you need to do is you need to change your default settings to something a little bit smaller. And our alternate settings for the DTS birds are 4-tick Hawk, 4-tick Falcon and Raptor, 6-tick Eagle. And it looks like I'd better be getting a little bit more aggressive with my stops here. Now, if you open up your chart, especially if you're trading some of the stock markets, because the stock markets, the brick size will tend to vary with the value of the stock. So if you're trading, a very expensive stock, something that's trading at $50 or even $100 a share, you're going to need a different brick size than something that's trading at $5 a share, right? You're going to notice that when you look at your chart, your daybreak lines are going to be different. So I probably confused the heck out of you, but what you want to do, if your software or your data feed allows you a market like the NASDAQ or the Dow or the Russell or crude oil or gold or just about any other market besides the E-mini S&P, you can see what a normal chart looks like. And I'm using air quotes when I say normal. So you can see what it's supposed to look like, and then you can adjust your chart setting to imitate that. But essentially what you want is you want it to offer you enough opportunities throughout the day. So if I looked at my hawk chart and let's say my daybreak lines were like this, this is supposed to be my scalper. You know, I would have had one scalp opportunity all day here. Sure, it worked out. It was the first micro macro cross, but that was the only opportunity that day. I would have had, you know, a couple scalp opportunities this day, and let's say we had another daybreak line here. I would have had maybe no scalp signals this day. So that tells me that my bar size is far too big, and I need to dial it down. Okay, I hope that makes sense. If not, please send me a screenshot. But when in doubt, go with the default settings. That's your starting point. Boy, oh boy, what a struggle we got going on here. Well, we've got the market boxed up pretty good. In fact, what you could do, if you were so inclined, you could buy a breakout higher, sell a breakout lower. They are stuck. Okay, I'm going to roll my break even in a little bit. If they take me that low again, they had better be committed to going all the way or I want out. Yeah, John says it's the 10 a.m. reversal. Yeah, and then there's another one at 10:30. If there's a dominant trend. All right, here they go. Once again, we'll watch it here on the Raptor. I've got my break-even trigger very tight because this is where the buyers are at, right? Buyers are coming in right here. Sellers are defending it right here. If the sellers can push below the buyers, you're going to start seeing some buyers abandon ship. They're going to run for the hills. Come on now. Somebody dip your toe in the water. They traded 45.16. We need somebody to go 45.15 3/4. 45.15 half, I think, is going to start a little bit of a panic. And certainly if we see 45.15, I think they're going to start bailing with both hands. Oh, you guys. Yeah, John saying, could you send them an email, please, to start selling? Yes. Hello? Hello? Yeah, we got ourselves into a little bit of a consolidation period here. Okay, the sellers are making their move right here. We've got a lower swing high. Okay, there they go again. Pressing 45.16. There it is, 45.16 half. Oh, come on, don't quit. I'm probably going to get stopped on break even here and have the bottom fall out, but we'll see. Oh man, they keep, there's 15 half, 16 half, 16 half, 16. Oh, 16 quarter, there they go. To see how the buyers got overwhelmed, got stopped out. That's what we were looking for. That's called trapping traders. And it's great when you're on the right side of the trade. It's not so much fun when you're on the wrong side. If we can hit our target here, then what I'm going to do is change to a different stop strategy, maybe something like the parabolics, which will be a little bit more aggressive. Here come the buyers. Come on, sellers. Are you serious or not? Let's go. Yeah, like Jim says, my really horrible day is when I get trapped. It's like they know where you're selling from. Yes, well, they do. We all do. We know this is where they're buying from. We know this is where they're selling from. It's not something they can hide. And they're just sitting above our profit target. Just kissed the first profit target. Providing they don't swing too hard here, we might even see them fall all the way back here to 4,500, which would be a very comforting number for the NASDAQ. I think that's where they bottomed out yesterday, around 4,500. Look at our Geiger counter. It's like a roller coaster. Talk about trading punches. Okay, another very important bar right here. I could roll my stop in above this bar, save a couple extra ticks. There we go. Pay a little extra commissions. If it fails here, then it's going to go higher. And if it fails and goes lower, once again, we have all these buyers loading up right here. Oh, not quite the follow through I was looking for. I was expecting a little bit more momentum, a little bit more hop to it. See, they're still fighting it out. Doggone buyers. The NQ buyers, amazing, amazing strength. Not that I'm interested in shorting the US stock market, but the signal is definitely bearish. And we'll save an extra tick or two. All right, I'm going to be ultra aggressive now. Just because the market doesn't seem to be having a lot of direction to it, I'm going to go with the bar high-low strategy. We've only got, I think, what's that, an extra 130, so about an extra $75 on the table locked in, but I would rather keep it than lose it. John is asking, do you trade the Russell or just the NQ? John, funny thing is, way back when I had Zenfire, before the whole fiasco with Zenfire, I had the Russell as part of my data feed. And now with Kinetic, it's under a different package. So I haven't sprung for the other package yet. Honestly, the Russell doesn't offer anything that I don't get with what I have now. If I want to trade a Russell type instrument, I will look at the mid cap. That's the EMD, the mid cap 400, which moves almost lockstep with the Russell. I know the Russell, a very popular market, a very good market. I like the NQ for two reasons. First and foremost, it's $5 a tick. So that almost always allows you to take multiple contracts. I don't care how small your account is, unless you're trading like $1,000 or $2,000 account, you should be able to take at least two contracts in the NASDAQ without jeopardizing too much of your account. That gives you some flexibility, like we are right now. It gives us the flexibility of having a runner in this trade, right? Rather than go all in, all out, which I just told you all the benefits of. And if I were a small account trader, I would definitely grab the profit when I had it. What are we up now? Approximately $250. I would be all over that. There's no way I would let that disappear. But it gives you flexibility that you won't have trading the Russell or the E-mini or one of these other instruments that are a higher tick value. The second reason I like the NASDAQ is it has enough volatility to satisfy any day trader. I forget the lady's name, but when we had the trading room open a few years back, I wasn't trading the NASDAQ at the time. I forget what I was trading, but this lady was following the NASDAQ, and she was cleaning my clock. She would say, Marilyn, that was her name, Marilyn. And Marilyn would be saying, "Oh yeah, Eric, I just picked up $500 in the NQ today, and another 600, and another 300." And it's like, what? What happened to the NASDAQ? Because when I was following the NASDAQ, it had nothing like that going on. So I gave it a second look, and yeah, the volatility is there, so you get decent moves. The momentum is there. The slippage is minimal. The worst slippage I've experienced, I think, was 2 ticks, which is very, very unusual. No, and the lower tick value, it allows you to dip your toe in the water. So even if you are, trading a very small account, you don't want to get carried away. You want to get the feel for trading real money. Go ahead, go in with a onesie on the NASDAQ or the YM for that matter, the mini Dow. And you can set up a position so it costs you 50 or $100. It's not going to wipe you out, right? And you can easily turn even a onesie into a $50 or $100 profit. So I got a little sidetracked there, but I'm also watching soybeans, and I'm also watching crude oil, which is very much like watching paint dry lately. And I'll be honest, I watch crude oil for you guys. I don't like trading crude oil. I find it a very volatile market, but I have so many people asking me about crude oil. So many requests for crude oil that I will follow it, but it is not my favorite market, I'm sorry to say. But I have had some pretty good profit on crude oil too, so maybe I should be a little bit more respectful of it. All right, so that worked out to be a fine little trade. We had to nurse it along for a little while. I was doing my best not to panic. Don't lose it. And I'm just as happy that we took profit where we did. The market tailed off all the way here, almost hit 4,500 even. Malesh is asking, how do I remove those vertical background highlights? I know, I don't know why they preset those, but they do. Let me show you. You go to your indicator panel and you find your tool. So your Falcon Swing Trader or your Raptor or Hawk, whatever it is. Roll here to the very bottom and you're going to find a subject or a setting for background opacity. Yours is probably set at 2. If you turn it to 0, it will make it transparent. So a pretty good day. We took that a little hit out of the gate. It was worth a try though, but we've since recovered. Multiple good signals. Had great opportunity here on the Hawk also. That green bar sell, I don't know if I would have tried that. I think I would have set that up for the failure, right? Because we're bouncing off of the lows here. Looks like we're challenging the highs. I probably would have set up that green bar sell as a buying opportunity. And then the market reversed, headed lower, gave us our first micro macro cross. I would have set it up something like that and then had no problem heading lower. So yeah, great morning in the NQ today. It's fun trading like this. All right, Jim needs the YM again. Here we go. All right. So here's the YM. We just took a little bounce off of the secondary support, and it looks like the next real support is not till 172.16. That would be a huge move for the YM today. When the support and resistance sweep bounces off of the primary support or the primary resistance or breaks through it, it tends to move 2 zones. So here was zone 1. We just hit zone 2. If it continues to trickle here, zone 3, 172.16. Well, well done, Mark. Mark says, looks like I should have. He says, finally, I waited and waited, finally took a trade on the NQ and the Falcon, 16-point profit on 2 contracts. Looks like I should have stayed in, but $600+, hey, I'll take it and run. Well done. Good job. Yeah, Jim says regarding the support and resistance suite, he says it looks like it's been hitting a lot of zone 3s lately, and you're right, it has. When it's been moving, it looks like we've been getting that whole zone 3. So yeah, that would be a very nice move for the sellers in the YM today. Might see a little bit of a retest. We've obviously got support here near the lows. Now that we've broken through, Could see a little bit of a retest and a failure. I could see that taking us down here to zone 3. As the sellers load up. So that might be something to keep a lookout for. So we're back in at the bottom end of this trading range that we've kind of set up for the day. You can see here's the first hour low. So more or less where the market opened. Soybeans still plotting higher, but not really giving me another opportunity to get in, which is unfortunate. I think I missed the move there, so not much I can do about it now. All right, just kind of waiting them out right now. Trading back into the hard edge. Maybe we'll see a reaction here. Wow, crude oil really stuck this morning. Well, as it has been of late. You see, yesterday's session, pretty dismal. This was Wednesday's, a little bit better. But this is very unlike crude oil. Look at this, another day, very quiet. You will get these spells where the market starts to get a little congested. If you're looking at the Eagle, you could dial it down to 10 ticks, but really there's not many opportunities to be had here. It's just very quiet for crude. I don't know what it's like in your part of the world, but I find it extremely annoying that crude is trading around $44, $45 a barrel, and I'm paying as much for gasoline as when crude was trading near $100 a barrel. But hey, maybe that's just me. I like expensive gas. It makes the car run better. No, there's no collusion in the oil industry. What are you talking about? Yeah, like Tony says, no kidding, somebody's making a bundle at the pump. Yeah, no joke, eh? Your cost of materials is a third of what it was a year ago, and you're still charging the same prices. Let me think about that. I guess somebody's jet needed an engine rebuild. I know it wasn't mine. My jet works fine, thank you. All right, so here they go. They're getting a little bit more aggressive. I don't know if I want to be too much in buying mode. If I wasn't in the trading room right now, I would call it a day. We've had one loser, I think 4 or 5 winners. There's my quota. I am done. I don't know if I need to be looking for another opportunity. Right about now, I'd be phoning the pro shop, see what tea time I could get. Before my wife makes me fix the screen door. Sorry, honey, gotta go. Be right back. And Malesh saves us with a great question. Okay, he's saying, if I don't have Trade Manager, where do I place my stop loss? All right, the biggest benefit of Trade Manager is that it's going to control your risk, and it does it very simply for you, right? I can place my stops here. I'm risking just shy of $300. I can place my stops here. I'm still risking about $300. So Trade Manager is never allowing me to risk more than I can afford. If you don't have Trade Manager, you're going to need to approximate it. So let's say for easy math, you're trading a $10,000 account and you're only going to risk, say, 2 or 3% of your trading capital. Generally speaking, anything 5% or less is considered prudent. So that means on a $10,000 account, you're going to be risking between $200 and $300 on a trade. So what that means is you don't simply want to say, oh, I'm going to trade 2 contracts every time or 3 contracts every time, because if you do that and you can only afford, say, $200 on a trade, and you set up your trade like this, and you're trading 3 contracts, well, you've just risked $750, which, you know, is 7.5% of your trading capital. If this trade goes sideways, you've just put a rather substantial dent in your trading account. So that's the first thing you have to take in mind when you're placing your stops. The second consideration when I'm placing my stops is I always try to go to a fundamental place for my stop. So what I'm trying to say is we're getting a reversal here, right? The market's obviously in a downtrend. We're getting a buy signal. We're getting a first micro macro cross. Okay, I know it's a high probability signal. I know DTS signals tend to carry a lot of momentum to them, but the momentum is not always instantaneous. Therefore, I don't necessarily want to place my stop right there. Because if the market engages and comes back even for a couple of ticks, all of a sudden I've incurred a loss. Okay, it's only a $60 loss, but that's not the point. The point is your stop loss is not there to minimize your risk exposure. It is your safety net. If if your trade comes unglued, where do you want out? Well, the most fundamentally sound place is right here below the swing low. Now, yes, the trade looks very lopsided, but your probability of this trade working out is very good versus the probability that this trade is going to work out. Right? This trade is much riskier than this trade down here because you've got a lot of room, right? Therefore, I recommend that if possible, you always go to above a swing high or low, and the more substantial the swing high or low, the better. Failing that, and I'm just using the hawk here as an example, but you can do the same thing with the falcon, the eagle, and the raptor, is go to something structural in your chart, like the macro line. Where does the macro line pivot? And you can do the same thing with the trend line and the falcon, the hard edge on the eagle, and the hard edge on the raptor. Where does that pivot? Failing that, you can go to the macro line or the hard edge of your eagle or your trend line on your falcon and your hard edge on your raptor. These are all relatively sound places to place a stop. Of course, it never hurts to shoot a trend line, so you can always do a trend line also. But the idea with placing a stop deep is that it gives you some staying power. So let's say, well, I'll leave that in. Let's say the market brings you in, and then all of a sudden it starts ticking against you. Right? So it's doing one of these, it heads lower, and now all of a sudden you're thinking, this might not have been such a good idea. And then it comes down here, it hits the trend line, and now it starts ticking higher. Okay, when it starts ticking like this, I would take my stop from down here, and I would definitely bring it up there. So whereas your initial risk was about $240, now you probably knocked your risks down to maybe 170, 180. And then as the market keeps going, I would keep rolling my stop. And at this stage, my objective is to get to break even or better. As we get closer to this resistance, I probably will get more aggressive with my stop in case the market does one of these and turns around. Then, you may as well stop me out here. And it looks like if I get stopped here, I would probably incur about $100 loss, maybe. It looks like about $100. And very often, when the market makes this next pivot, that'll be the do or die point for the market. So it'll make one more push, and now you can get a little bit more aggressive with your stop still. And it's either going to find your profit target or it's going to pivot on its heels and stop you out. In which case, it looks like you probably incur about a $70 or $80 loss. So rather than strangle the trade right out of the gate, I try to place the stop to give myself the highest probability that the trade has a chance of working. And if in fact it does move against me, I've got a chance to somewhere manage my position as the trade progresses. And worst case scenario, if the bottom falls out of the market and it just goes boom like this, I haven't lost any more than I can afford to lose. All right, so that's the worst case scenario. That's the safety net. But you always need to keep a handle on this risk amount, right? You don't want that to be an inordinate amount relative to your trading capital. If you do that, if you manage that correctly, you'll be able to hang in long enough that when you hit a winning trade, you'll actually be able to enjoy a profit. But you can see a lot of times the signals, they generate immediate momentum and away you go. So it's hard for me sometimes to find a good example of what I'm talking about. Well, here at the macro pullback, not too bad. Again, market in a downtrend, and I'm always reluctant buying into an obvious downtrend, right? Why? Well, because this may turn out to be nothing more than a bear flag. So I need to be very cautious when I'm buying. Okay, macro pullback signal. I know it's a high probability signal, but do you see what's happening here? We're already getting a little bit shallow. If I draw my trend line a little better. We're already getting a little bit shallow here from the top end. So there's every reason to suspect this might be a test of the extreme and then a failure. So if I do choose to take this, it would be the same kind of situation. I'm going to try to give myself some staying power. I'm not going to throw my stops in right below here. Well, you could, I suppose. But better, again, safety net. I know if it fails here, I'm definitely on the wrong side of the trade. So the market brings me in, oops, fails a little bit, and now it starts going higher. Well, now I'm going to start rolling my stop, right? I'm going to roll, 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 roll. And look at that. We hung in long enough to realize our profit. Whereas if I had put my stop right down here to start, oh, I would have sucked up a loss. I've shared this story with you guys before, so those of you who have heard it, forgive me, but a fellow who I was mentoring phoned me one day after trading, and he was devastated. He said, Eric, I think it was $600 or $800 he lost in gold. And I said, how could you lose $800? I just made $1,000. So we're trading the exact same market. He lost 800, I made 1,000. And he did it because he was strangling the market. He was strangling his signals. He never gave his trades a chance. And he was risking more than he could afford. His trades were all lopsided. Not lopsided in the risk-reward sense, but lopsided in the sense that he never gave the trade a chance to mature. I think it was Josh the other day who sent me a screenshot of a chart that he got in a situation like this macro pullback where he took the trade and he started with an initial stop down here, and he finally got the trade to break even, and he popped out with break even +2 or something like that, and he says, Eric, what could I have done better? And it's like, Josh, man, you did that perfectly. You know, the trade moved against you. it started moving with you. You adjusted your stops. You got it back to break even. You punched out with profit. I think eventually it went high enough it would have hit his profit target, but just barely. And I think he was a little disappointed that he didn't hold on longer. But no, if you got a situation like this and the market gets back and you happen to get out at break even instead of a small profit, well done. Well done. All right, still in a little bit of a chop fest. You see what's going on here is we had sellers sell right here. We also had buyers overwhelm them. And we had buyers buy up here, and we had sellers overwhelm them. So we saw all these buyers bail right here. That's why the market came down as it did. And now we're probably going to see the sellers ditch if it gets above this 45.10 area. Oh, it did. Sorry. So maybe 45.14, 15. Because the ones that sold down here are starting to sweat a little bit. They're thinking, oh, please come down so I can get out of the trade at break even, or maybe for a small profit. The guys who sold up here are laughing, right? They're not worried. They're in for the long haul. Jim says the DAX is puking it up in his eloquent way. I think it's a bear market today. I think we're safer on the short side. Whether we're going to take out these lows, that I'm not so sure about. These are some pretty substantial lows. Let me build you a daily chart here and you'll see what I'm talking about. Oh, good question here from John too. John asks, would you suggest mastering one market rather than trying to follow the four that you do? It seems very distracting to me to try and follow that many instruments. Absolutely, John. Absolutely. Definitely learn one market because each market, it does have its own personalities, right? We see different things on the mid cap than we see on the NASDAQ, and we see different things on the NASDAQ than what we see on the NQ, even though they're similar markets. So here's the monster support that we're looking at right here. This is where the buyers stepped in before. If this fails at 4,500, what's the low here? 44.97. That's as low as the buyers allowed the market to go before. If 44.97 fails, we will definitely be heading lower. I'm hoping that you can recognize this test to the extreme already. And we'll see a little move to the downside. But monster support right there. That's why I say I'm not sure we're going to see them commit that hard to it going into the weekend. Of course, I have been known to be wrong once or twice. So we'll see. We'll see how the day finishes, but that's what I'm focusing on right now, is that we're a bear market. If we get below 44.97, then we could be into something. So you know the buyers are going to dig in at those levels, as will the sellers. They're going to try to force it below there, but you know what? It's Friday. I'm just checking here, making sure I'm not missing anybody's questions. We had a good session. So unless anybody has any questions or wants to see something, then I think we might make an early weekend of it. What do you say? I have a feeling we're going to see the market remain congested. I'm laughing here because I got a couple comedians in the room. John's asking, what is the meaning of life? Why is the grass green? Why is the sky blue? Why is the water in the bathroom always colder than the water in the kitchen? All right, you guys, have yourselves a wonderful weekend. I've got 2 weddings to attend this weekend. Oh my gosh, it's going to be a busy and expensive weekend for me. And I'll see you all next week, bright and early, Monday morning. We'll talk to you then. Have yourselves a great day. Bye for now.